Good morning, this is Graham Bibby on the 9th of October 2015, coming to you with my weekly market update. This time I'm focusing on the market leader of the US. I say the market leader because that's the market all other markets at the moment seem to follow. By that I mean if the market has a strong up day, then when Asia opens and Europe opens, they seem to follow and have an up day. If it has a down day, the reverse happens. So what's been happening recently? Well, the last week is good and bad in some respects, because the previous week we had a huge sell-off in the markets, resulting in our exiting the markets for protection. And then hey ho, when we got to the bottom of where we were in August, the market reversed and has gone straight up in basically a straight line. So here in front of me now, the arrow is pointing here to the left. We have the Standard & Poor's 500. It's the top 500 stocks in the US. So this was the huge sell-off in August, which we managed to avoid, most of it anyway, because we just got out when this reversed. And then we got in when my undervalued superior earnings stock started to break out to the upside. And it looked like that was the right thing to do, because this index broke above this previous top level here, this downtrend. And when that normally happens, that's the sign that we're getting a breakout and a move in the direction of the breakout. Technical analysis and chart following and even psychology is not a perfect science. And then what we found is people profit took and the market basically crumbled back down to get to the support level of around the 1850 to 1875 level, and then boom, we bounced 1, 2, 3, 4, 5, 6, 7 up days. Now this isn't a trend, because a trend is where you get some up days, profit taking, up day, profit taking, uptrend. That means it's not an absence of sellers, it's not an absence of buyers. There is an orderly action in the market, because what happens is when the market rises a bit, some people tend to take profits, and then as they take the profits, the new people come in because they think this is a longer term trend. So anyway, that's the Standard & Poor's, and what we've got to do now is see if the market breaks above that high there. That high is 2016. If it breaks above that, and then we need to see a correction for a bottom to be in place, then we can move after it. The Dow Jones 30 is already breaking through here to the upside. This chart looks a bit better, because although that breakout there appeared to be false and we went back to test, we didn't test this low. We've tested higher. So that's positive. And now we're inching higher than that previous top there. So that's positive, very positive news. So what we need to see again is some profit taking and then some upward action. And the other interesting thing is this moving average here, which was signaling the downward trend, is turned over and is pointing upwards. So if this pulls back to that moving average and then turns up, I would say all lights are green. We should be piling in. This is the Nasdaq. This is the fall off the cliff in August, and then bump, rebound, and then action, and then we broke out significantly to the upside, which looked great. But then we've gone back. But again, this buying in level is much higher than that one, so that's positive. This isn't anywhere near breaking that high yet, but the moving average is here, and we're slightly above it. So, you know, on balance, it's positive. But we've also got this overhead resistance here. So we need to see more price action in this. Now, in my analysis this morning, I've come up with some very interesting things in my special situations service, which is undervalued, beaten up areas, extreme value where stocks are selling for the cash in the bank, sometimes below. Some are selling for half their book value. So I will be putting out another video, but it'll be focusing on those areas that are beaten up, and they're up a lot in the last 7 to 10 days. And when I say a lot, I'm talking 20, 30 to 100%, but they're still down 90-odd% because they were so beaten up. Now, let's move out a bit further here. I want to show you the Russell 2000, which is a smaller size companies. It's normally the more nimble, more dynamic part of the market, because this is where all the deterioration in the index came. This is definitely a downtrend here. We broke support here, and then we fell off the cliff. And then we've been getting positive action here, higher highs, this is all higher lows. We broke out. This has added to my conviction when we went back 100% in the market. But this is really unusual. We then fell off another cliff below that low. This was really, really negative. Maybe the powers that be in the US signal some action to start buying the market. It is rumored that sometimes certain people will come into the market to support it, to avoid the unthinkable happening, which would be a major decline in the markets. So we've had this significant rise, but we're at this downtrend level again. So we need to see more action. And then again, when I look through the market at what was darlings before, Facebook still having difficulties getting anywhere. The darling Apple, which many of the biggest fund managers in the world, Ray Dalio and people like that who manage billions and billions, they're heavily into this stock. But you see, it's got a lower low here. This is a negative. It bounced from the August sell-off, looked quite positive, but right now still it looks more of a negative trend. Avigo, which has also been a darling in the past, has been finding it for about a year difficult to get anywhere, and that's not looking that positive, looking in a downtrend. So that's not great. Skechers, which has been really good to us in the past, looks more in a downtrend than an uptrend, but that can reverse. Starbucks, so I love this company, but yeah, that's got a stop loss point here. Could be bought, but we just had our fingers burnt. And again, people have to realize how difficult the market has been in the last few months. I mean, really difficult, but this will pass. And I want to point this out because this is in August. The stock was 58 here, and it fell to 42. That is huge. So right now, what I'm saying is there are signs of things like the oil and gas sector breaking out here. So look out for the special situations update. I'm still on hold at the moment, but next week I feel even more confident that we'll be getting those signals of what to do in the market and whether we should be buying in right now or waiting a bit longer. But I know I'm adding this weekend to my undervalued superior earning stocks, and if they've got 20 to 30% earnings growth, when we're back online, that's the kind of money they'll be making. So on the 9th, which is my favorite number of October, which is my birthday month, have a great weekend ahead, and I'm looking forward to getting back to profitable ways. Bye-bye.